Hello again, this is the third part, and under the third part, how to actually trade the binary options. And under the we are at the money management rules chapter. Now, one of the most important, if not the most important thing to do is to take into consideration money management rules. Divide your amount, divide your trades. Avoid classical mistakes. How to avoid classical? One of the classical mistakes is, for example, you are looking at this Australian dollar, US dollar, real-time example that we have here. So the strike price is 90.30. It is out of the money, and you have the option to duplicate it. So you click approve, and by the time I clicked approve here, it has been duplicated. See the trade, it is 0.9031 is the strike price. Then you have the same expiration date, so the expiration date is here is the same 17.10 GMT, and then the original time that we took the trade is 12.15, and now it is 12.53 GMT. Still a put call, so looking for the price to actually be below. So the let's say the option price was 0.9030, and we are looking for the price at the expiration date here to be below 0.9030, and the potential payout is the same 19.36. Now, by the purpose of these examples, all of our examples here seems to be they are in the money now, but this is a classical mistake, and I'm glad that I was able to show you that. For example, what kind of tools you have, for example, on the euro US dollar, which is in the money now. Tools is duplicate your trade, double your investment when in a winning trade, and duplicate your profit quickly and easily. And I don't know how quickly and easily this would be, but this is one of the classical mistakes to wipe out your account fast. Think of the fact that the markets are not going to go anywhere. It's is a market that is going to open also tomorrow. Why risk not everything that you have on your account, but why risk your account on one single trade, on one single positions, when normally you have the opportunity of doing so, of doing many trades on different time frames, on different expiry dates, and to protect your investment. Try to invest small amounts based on the fact that the majority of binary options are being recompensated, so to say. They have a potential payout of around 70%. Try to look for having as many possibilities of enter the market, and look for breakouts. One of the breakout just happened today, as this is the euro Japanese yen, but let me clone the chart here, and if I clone the chart here, it is the example on the Australian dollar US dollar that I showed you earlier with that triangle. See, that triangle on the Australian dollar US dollar just broke up today. So why looking for being squeezed here on one side or the other, but wait for a pattern, and once the pattern is being identified, wait for the break, and by the time you have the break, then move to trade the binary options. Now, if you have such a triangle and you identify such a triangle here, and this is a 1 hour chart, you may choose different the expiries on the same date. You may choose different expiries. For example, if you look at this high here, this is a high, and of course that you are looking to buy a put because you are looking for price to go lower by the time the option expires at the expiration date, to be in the money. And this high here, for example, was 0.9189. You are seeing that this high here failed to break those highs. So normally on such a strike and break here, you have 3 lower highs. So the logical step would be to go on and buy put option, not short-term put option, but to buy put options that should go, I don't know, up to 1 hour or 2 hours, depending on the time of day you are trading. The same here with the Euro Japanese yen. As you can see, this has a chance to evolve into a triangle. Now this was a high, this is another high here, a lower high, and this is yet a lower high, because the high value here is let me see, so the high here is approximately 129.97, and the high here is approximately 129.90. So the highs were not breaking. You are having a series of three lower highs. So you are using this example. So with this one, with this being here, so providing that those highs are not being taken, looking for this trend line to break, and then go and buy put options on the regular trading platform, and those put options should look for the price to move to the downside when the triangle is going to break. Now this triangle here, it looks to break to the downside. It looks to be a bearish triangle from my point of view. You should, if this was not Friday, normally I would trade this triangle with buying a put, but this is Friday. Is quite let's say before the London session to be closed, and I don't think that this is the most appropriate time to trade binary options. First of all, because the expiries are going to come for the main expiries of the day just before the London close, and the New York is about to come now. But if this situation would be of Monday, and if this triangle holds until Monday, then there you go. I will be Monday on this triangle, trying to play that break like it happened on the Australian dollar and the US dollar. Now this is about how to avoid classical mistake, and one of the classical mistakes to make is to double your amount, like I did on the Australian dollar, US dollar. Now let's check on the expired position, because as you can see, the expired was the euro dollar, the 130.36 that we had to expire at 17. Okay, so the trade that we took earlier expired at 17, and the strike price was 130.36.7. We bought a put option. Buying a put option, you're looking for price at expiring to go to the downside. At the expiration date, we were having see, this is the 12th of July 2013. The rate was 130.32. The investment was $10 US, and we had a nice return of 17.5. This expired just 1 minute ago. This comes to complete the recording with trading binary options on with different expiration dates. Now this was the shortest expiration date. The next expiration date that we have is on the Australian dollar, US dollar, and this is going to come in about 9 minutes from now. Now in 9 minutes from now, we are looking for the Australian dollar, US dollar to be lower than the strike price. Strike price was 9.9030, and in this case we should receive a potential payout. Now we just doubled the investment just a couple of minutes ago, and this is one of the classical mistakes. Don't put your eggs into the same basket. Try to find another opportunity, because the market is not going to go anymore. I can't stress this enough, and I am basically saying nothing under this chapter except that this is one of the most important advices I can get you. Divide your amount into equal amounts, equal parts, to have as many chances as possible, and do not by any means duplicate your investment. In this way, you are more close to gambling than trading. And believe me, this is not gambling. Moving on to the next recording, please.